Hello, thank you everyone for attending. My name is Si Wing Yi, and my special guest host is Mr. Tony Bruno, a local realtor here in San Francisco Bay Area. He specifically targets Alameda County, which is on the East Bay. The total population right now is 1.5 million. When I go through the numbers, the metrics from Redfin, you will see mind-boggling data that's gonna surprise many of you. By the way, Tony Bruno, again, he's the nation's top 1% of all realtors. He's been buying and selling in the San Francisco Bay Area for more than 30 years. Tony is a friend for a very long time. Thank you, Tony, to take time out of your day. You have a very busy schedule. You do a lot of transactions.
Always my pleasure being here.
Before we begin, if you see value on this video, please smash the like button and subscribe to my YouTube channel. And furthermore, also I ask you to subscribe to my email from my website below so you can become a free member of our real estate investing community, part of my network. So you receive weekly investment newsletters on turnkey cash flow properties on out of state. So without further ado, we have a lot of things to cover, exciting information. It'll blow your mind. I'm going to start off Redfin data, which I use quite often on a monthly basis, and other resources as well. We can go through Alameda County, which is one of the 3 or 4 largest county located in the greater San Francisco Bay Area. And I know a lot of you have been hearing a lot of negative news around California and the western region of the U.S. and prices are reducing and all kind of volatility going on in the western region of the United States. And California is one of the housing market that has become very volatile. Okay, let's quickly go over the 7 metrics. We go over the active listings. Number 1, number 2 is new listings. Number 3 is pending sales. Number 4 is median sales price. And number 5 is days on the market. And number 6 is average sales to list ratio. And number 7, months of supply. All right. So let's get to it. And active listings, the blue line is 2023. And I'm going to mostly compare to 2022, which is the black line. And then 2021, which is the orange line. Both are comparing. We can discuss about that. So during the peak last year, 2022, when the interest rate has skyrocketed from 4% to 6 to 7% in the middle of last year, that's where we saw the correction. Active listings at the time was pretty fairly high, but then the listings has gone way down due to lack of lower demand and what have you, and has gone really have a big drop in active listings. And then at the beginning of any season, historically speaking, seasonality, the spring buying season is always very robust because people are very motivated to buy homes, especially, I'm sure Tony can mention about that, in the April or May of any year. We always see the spring housing buying and selling season of very, very robust and very strong. But as you can see by this blue line 2023, we are not seeing that. As a matter of fact, we started back in January and the trend has gone down. It leveled off in February and it's slightly going down. So this active listings are a very disturbing trend. There are only 1,119 active listings just came on the market, which is almost 20% lower year over year from same time last year on 2022. And so the trend, who knows if it continue to go down next few months. So this is very interesting to monitor. We will monitor it. I would invite Tony to come back every month because things are changing so much. So now let's go to the new listings. Now, normally, again, the spring season, the new listing normally skyrockets. But as you can see, year to date, March 2023, on this blue line, new listings, 110 new listings in Alameda County. Alameda County, for those of you who do not know, which is Oakland, California, have about 500,000 people at least. Fremont, of course, have typically around 300,000 people. Then the surrounding little cities are Hayward, San Leandro, and Union City. And Alameda, the city of Alameda, have the remaining 200,000 or 300,000 people. So I would say, give or take, the Alameda County is in East Bay, in the Bay area, is around 1.5 million, give or take, right? Totally, am I in the ballpark?
That sounds about right.
And look at this. In a county of 1.5 million. We have 210 new listings. Year to date, March 26, 2023. I know this is a lagging indicator and all that. I get it. But it's a 45% lower on new listings from same time from last year, which is last year, as you can see the block line, the last year to date new listing was 376. So this is a very troubling trend. So we don't know what's going to happen next few months. Tony, later, Tony, you may want to predict. Before you just say anything else, let's go over the pending sales that things that went under contract at the beginning of the year and pending. The contract has been signed. It's a matter of closing escrow. So pending sales year over year, again, is only 200 transactions. It's 44% less pending sales year over year from last year. Last year, same time last year, 22, there were 358 pending sales. Now they were only 200. So we're seeing some maybe leveling off of pending sales. If it doesn't go up in the next few months, that means totally, my guess is the sellers are still have a lock-in effect. Sellers that are sitting on their pretty historical low interest rate, around 3%, 3.5%, 30-year fixed rate mortgage. They are not selling the houses. They will stay put. Anyway, all right, that's the pending sales. And the next category would be medium sales price. A lot of you are thinking, oh, how housing prices have gone down to the toilet. It just had coming off the cliff. We'll see. Okay, we'll see from a local expert like Tony. He will share the reality, what's going on, as opposed to other people looking at just data from Westbank or any other sources. They think everything is doom and gloom. But having said that, the peak of last year, 2022, before the interest rate went skyrocketing, we have the medium sales price. Not the average sales price is always much higher than the medium sales price. But okay, let's go with the medium sales price at the middle of last year, dated June of 2022, was like 1.26 million. Then, as you can see, when the interest rate went all the way up the last half of last year, and by the end of last year, December 2022, the medium sales price was $954. So we're talking like almost $300,000 price drop from the middle of last year to the end of last year. So there's a very, very steep drop off in medium sales price. And then we fast forward to the beginning of 2023 this year. And then beginning around January 16, we have seen the price continue to drop all the way down to 884 medium sales price in February the 12th. Then from February the 12th all the way until March 26th, as you can see, this trend line has really skyrocketed again from 884 medium sales price in February 2023 this year to all the way to 1 million now, ending March 19th. So this trend, it continues to go slightly up. So we're seeing lot of positive activity in the areas. That's a medium sales price. There's no crash. Some of you are thinking, oh, look, California is crashing. I don't think so, but we'll hear from Tony momentarily. And then the next scenario would be days on the market. I think, days on the market. This is interesting. Medium days on the market. Look at this. As of March 26th again, days on the market, a little bit less than 14 days, medium days on market. It was back like the beginning of February. The medium days on market was 39 days.
And then it gets pushed above $1 million. So yes.
Yeah. So entry level, some other part of the US could be 300K, but in the Bay Area, California, it's less than 1 million. Price is selling very well, very fast, especially homes that are priced correctly right now. And then especially if the house is all rehab or turnkey in a good location. And that's what we need, a very good competent realtor like Tony Bruno that may help sellers to market the houses correctly, not crazy. We'll get to that momentarily. Tony have a lot of great things to say. He has wood on the ground, and so he give you the real information instead of the media overhyped negative headline sensations you hear all the way out there, especially to those YouTubers out there that are the crash bros. The crash bros always get the clicks because they always use the word crash every single video they produce every single day. Average sales to list ratio. Let's go with that. Average sales to list ratio in Alameda County Bay Area. At the peak of last year, because of the very low mortgage interest rate and skyrocketing prices, the average sales to list price is 1.18%. So there's a lot of houses that are sold above asking, obviously. And then, of course, throughout the second half of last year, it has gone down tremendously, all the way down to whereby the average sales to list price is even at 100%. And then look at the current trend. Look at the current trend. I mean, back in February, only about a month and a half ago, the average sales was below, average sales price was a little bit below the list price. But however, look at this trend from February 12th until March 26th. We're talking like 5 weeks timeline. The average sales to list ratio has skyrocketed all the way to 1.05. So 0.05 is the final sales price above the asking price. So that tells me there's a lot of activities going on. There are a lot of people out there trying to buy homes in the Bay Area. Of course, Tony, what were your thoughts? I know you got a lot of great things to say and talk about this as well. And finally, the most critical component, housing 101, economics 101, that will make or break how the housing market is happening. This is month of supply. Before going any further, let me re-educate you guys. The normal healthy market is 5 to 6 months of inventory, whereby there are supply and demand is at an equilibrium. Anything under 5 months supply of inventory, we're still technically a seller's market where there are more demand than there are available supply. So let's look at the actual month of supply in the Alameda County, a county of 1.5 million people. Look at this, dated March 26th. Weeks of supply is 6.3%. I just did my calculation. The supply of inventory is around, correct me if I'm wrong, Tony, is 1.5 months. 1.5 months available supply of inventory in the Alameda County area. We are getting closer to the historical low amount of inventory. Look at 2021. 2021, the orange color right here. 2021, where the interest rate were like 3 to 3.5%, 30-year fixed rate mortgage, when there are massive multiple offers. That's where this 2021 was the most robust home market in the history of America, where bidding war like 20, 30, 40, 50% over asking price occurred in 2021, reached historic market. The month of inventory during that time, you look at the orange color right here, year over year, 2 years ago, 2021, were like 5.1 weeks of supply, which is around 1.1 months of inventory in 2021 during the year. And now is only a slight higher, 1.5 months. The only difference was today's mortgage rate, according to Mortgage News Daily, today, which is 2nd of April right now, the mortgage rate is, today's mortgage rate is 6.5%. Look, just listen to me, and everybody out there listening. Today's time housing market situation, at least in the Bay Area, Alameda County, 1.5% monthly inventory, and mortgage rate is 6.5%. During the robust historical year 2021, supply inventory is on 1.1, 1.2 months of supply, and the mortgage rate were 3 to 3.5% rate. So much for that. I think I'm done. Get back to a normal. So Tony, you have a lot of things to say on the 7 metrics. Go ahead and take your time and enlighten the rest of us. What are your thoughts about the data point I just mentioned?
First of all, I did Google population for Alameda County, and as of the 2021 census, it's 1,650,000. So we were close. The Bay Area's got microclimates. You mentioned 1.5% or 1.5 month supply. Some communities like Fremont, Newark, Union City, it's well under them. We're actually closing an escrow today, property in the lake area of Newark, one of the nicer communities there. We put it out at $1,299,000, and it's closing today for just under 1.4 million. We had multiple offers, and it's just like it was in 2021 and 2022. They're just out there in high demand. This trend's going to continue. Like you mentioned, we had lots of move-up buyers in 2020, 21, and 22 because rates were low. People that bought their entry-level homes were able to trade them up into nicer homes. With that lower interest rate, their effective payment was the same. So we're not going to see a big bump in inventory anytime soon. Not in my opinion. The economic factor, we were hearing about layoffs. We're also hearing that people are getting laid off or being reabsorbed back into the workforce in 2 to 3 months. So I think I'm cautiously optimistic. I don't think we're going to see a crash. I do get phone calls. Hey, I see you're listing at $1,299,000. Can I get it for $1,000,001? It's not, but you can always try. But then when we get the multiple offers, that conversation all goes away.
Tony, my data shows me, I'm sure you agree, that most of the homeowners that refinanced back in 2021 and the early part of 2022, of all the people that have houses throughout the country, 40% of the individuals have no mortgages, free and clear. And 65% of people that have mortgages of less than 4%. And 25% of people that have mortgages right now nationwide, they have mortgages of less than 3.5%. So those sellers out there, there's no way they can become a move-up buyer. There's no way they're gonna rid of their 3% historically low mortgage to move up to a house that are more expensive today that have to pay at a 6.5% interest rate, which is more than double the mortgage payment. There's no way in hell they're gonna do that. So as a result, all over the country, not just the Bay Area, sellers are not budging. They are not selling. They are staying put. If necessary, they can stay put for the rest of their lives. So they can live their fixed rate, amazing low rate mortgage and inflation hedge, recession hedge, any kind of hedge were out there. So what are your thoughts? How what I just said impact the Bay Area housing market right now?
You mentioned that they are not going to be selling anytime in their lifetime. So that's what we're waiting for. Death and divorce. That always brings on transactions, sadly enough. Most of my business now, when I started out 35 years ago, was young couples. Now it's those young couples selling their parents' houses who have passed away. Or a lot of the people in my age group now, of course, they cannot buy in the area, but if they're going to sell and move out of the area, buy to a more affordable area, then they're in a great position. Just a really good position. If they're mortgage free here, they can be mortgage free in their new home and they'll have some money in the bank. So I do think we're going to see more and more people in the next few years that are going to be aging out like me, not anytime soon, but probably within 5 years, I'll be leaving the Bay Area for more affordable housing.
My guess is that people like you and I, we are right at the middle of the baby boom generation. If people were to sell their homes, it's a light event situation, probably sell it and use their cash to buy all cash houses in Las Vegas or in Sacramento or in Boise, Idaho, or Phoenix, Arizona, or Texas, or Florida. So that's the migration trend for baby boomers. Anybody want to sell in the Bay Area, their houses. Otherwise, if the people that own houses right now in the Bay Area, if they are much younger, if they are millennial age or Gen Z, I believe, I'm not sure what age group Gen Z, between 40 and 50, I think, or Gen X, forgot all that. So Tony, what other additional transactions you have seen, a typical transaction that you have seen in the past couple of months, and moving forward the next few months, being that spring buying season is normally is very strong. So what trends are you seeing?
My partner and I, Beth, we've had 4 listings so far this year, and they all sold to first time buyers, not a single move up buyer. And again, every one of our listings went for over the listed price by a pretty substantial margin. And again, I think that's going to continue. And people ask me, am I overpaying for my house now? It's the bottom line. Real estate has never been a short-term investment. It's always been long-term. If you're buying with the plans of staying in your home for 10 years, you're going to do very well for yourselves. Less than that, I think we're still going to see some volatility. That's the name of the game, especially the Bay Area real estate market, because it's so tough. We might drop 20% in 2 years, but 3 years later, we're back up. We've gained that 20% through another 10% on top of it. So long-term, always optimistic here in the Bay Area.
I totally agree with you. You and I have been living in the Bay Area for way more than 30 years, and we have seen many real estate cycles. As long as you invest for long-term, everybody should be fine. Getting back to your buyers, what I hear you saying is that all these high-tech layoff getting a lot of sensational news media and all that, and all the layoffs, major high-tech companies. But high-tech workforce is only comprised of around 5% of the workforce. So are you saying that the people that got laid off because they're highly skilled, many of them or most of them are getting re-employed, they get rehired by some other companies within a few months? Is that your local?
Yep. I only talked about what I hear on the news, but that's what I've heard. People that are laid off in high tech, within 2 to 3 months, they're back to work.
Okay. So what about the buyers you have seen in the past few months? You said they are first-time home buyers. What is the typical financial situation? Are they paying 10% down, 20% down? Some of their down payment come from their parents as a gift. What type of buyers are you seeing?
We're seeing pretty substantial down payments. The house that's closing today in Newark, I think they're buying with 30% down. But we have multiple offers. The two top contending offers, one was 10% down, one was 30% down. Then a no-brainer, always go with the people that have more down in case there's any sort of hiccup in the transaction. So we are seeing more. And again, in the Bay Area, there's a lot of income here, stock options, and probably, like you said, family money. We don't really see like gift letters. That's something that the lenders will be seeing. We don't see those in our daily business, but I suspect a lot of our buyers do get money assistance from their parents or wealthy family members.
What are their occupations based on your own transaction in the past 6 months?
Predominantly high tech, and actually a couple of people working in the trades, electricians and plumbers. Again, in the Bay Area, they're pretty well compensated across the board. For the most part, I'm just looking at this year.
Tony, I know you and I, we do not have a crystal ball, nothing like that, but if you could project for the rest of this year, 2023, now, if the mortgage rate stays around 6.5%, maybe even up to 7%, some experts predict the mortgage rate is going to be anywhere from 5.75% to as high as 7.25%. This is the range. So given this volatility range of mortgage rates up and down, what do you see what's going on in the Bay Area in terms of your business and housing market in the Bay Area?
I really think if the inventory remains light like it is today, we might have fewer buyers out there, but I don't see prices coming down anytime soon. It's a tough one. Any seller I'm talking with right now, it's let's get on the market ASAP. Typically, we see more listings coming on towards the end of the school year, April, May. Last year, when we saw that big push of properties hit the market, we don't need the addresses in as Fremont, Mission, San Jose, Irvington attendance area, American attendance area. And if they're staying in the Bay Area, they might be selling those homes in the higher end communities and buy into something, maybe a smaller home. But again, I don't know. But I don't think we're going to see a big glut of listings in the Bay Area anytime soon.
What about first-time home buyers? First-time home buyers in Bay Area, like people with FHA, 3.5% down payment, or VA, military veterans like myself, who have a 0% down payment. First-time home buyers in this category, do they stand a chance against the competition?
I work with a lot of VA buyers. My father was a veteran, and I love getting veterans into properties. With the limited inventory, and VA loans aren't as stringent as they once were. Even the buyer can take care of Section 1 termite clearance these days, from what I'm told. We just don't see many of them out there. FHA buyers, I have not seen one come in on any of my listings this year, or even last year for that matter. Again, because there are more substantial down payments. FHA and VA are both excellent loans. My son-in-law and daughter, they used his VA loan recently, and far below conventional financing. But yeah, the Bay Area price point's just tough for the VA buyers here.
Not so much for the down payment, lack of down payment. It's not those reasons. It's just the price point's too high. They have to buy with the salary that can meet the price point. So I get it. Not because they have a FHA or VA loan, it does not preclude them from competing as long as they qualify. Final thoughts, people listening right now that want to buy. Is this a good time to buy? Should they stay in the sideline until the market crash 50%?
The best time to buy is when you're ready to do it. If you wait for the market to crash, I wish I had a crystal ball at the peak of the market, but I'm still sitting in my beautiful home in Fremont. Fortunately, I don't have much of a mortgage, so it's a good place to be. My thought is buy with the expectation of holding it long term, and you're going to do very well for yourselves.
I totally agree with you. I do have your contact information on the video below. People know where to find you if people need to buy their home or sell their home anywhere in the Bay Area. In particular, Alameda County, come see Mr. Tony Bruno. Thank you so much for your time, Tony. I'm going to invite you back 1 month from now and to share some more great, exciting, important news. Thank you so much.
Always my pleasure. Thank you so much.
You're welcome.
Have a great day.
Have a nice day, everyone. Bye bye.